So there were some questions on problem 17-32A. So I just wanted to go ahead and go over that problem. So let me bring it into this screen here. Okay. So they give you a trial balance, and then they give you some various other subsidiary ledgers, and then finally kind of what happened. So let's go ahead and do the journal entries for these items, and then we'll talk about what else we need to do. So the first one is collected $145,000 that was on account. So if that's the case, this is A, your cash went up 145,000. That'll be a debit. And then your accounts receivable went down 145,000 because you just collected that. So let me just do this. All right. So then for B, selling and administrative expenses incurred and paid 32,000. So let's do selling and admin expenses are 32,000, and then we'll have cash of 32,000. That is gone. Now that's not any type of overhead because it's not part of the manufacturing process. It is simply selling and admin expenses. For C, payment on account of 39,000. So here we're just going to lower our accounts payable by 39,000. And lower our cash, 39,000. And then for D, we purchased some materials, paper, and indirect material. So for D, this is C, and this is D. For this one, we have inventory. We increased our inventory and it's on account, so we have not paid it yet. So that is considered raw materials, and it's going to be the 24,000 and the 4,200. And we're going to go ahead and increase our accounts payable. Okay. Materials requisitioned and used in production. So basically what happened was that somebody said, hey, we need this stuff to make stickers or whatever it is we're making. And so it went from raw materials into work in process because it's no longer in the raw material form. Now we are making something. So for E, we are going to increase our work in process and for our inventory and our overhead. So remember, if it's direct materials, it's going to go to work in process. If it's overhead, it's going to go into, or if it's an indirect material, it's going to go into overhead. So our work in process, inventory. So let's talk about what that's going to be. So our work in process inventory is going to be our paper and our paper. So it's going to be the 950 and the 7,900. And then our indirect is going to go into overhead. So manufacturing overhead, and that's going to increase by 1,200. And then we're going to lower our raw materials by those amounts added together, which is $10,050. All right, so then for F, next page. Wages incurred during June, and it has different types of wages here. So again, the direct labor is going to go into work in process, and the indirect is going to go into manufacturing overhead. And it looks like we have not paid that yet, so it's going to go into wages payable. So for F, we have our work in process for our labor, and that's going to be our direct labor, which it looks like is the 3,600 and the 17,000. Okay, and then the indirect labor is going to go into manufacturing overhead. And that is going to be the 18,400. And again, we haven't paid it yet, so it's going to be wages payable. And it's going to be the total of those two, that 39,000. So let's take a look at G. Which is wages were paid of 36,100, and then the wages incurred in June. So 36,100 of wages and whatever was the remaining balance. So let's set it up first. So we have wages payable. That's going to decrease, and then we have cash. So our wages payable we know is going to be the 36,100 plus whatever the balance was left in June. I'm sorry, not June, in May. So let's look at our balance sheet or our trial balance. And we have wages payable of 2,600. So I am going to have our 36,100 plus 2,600. There we go. So then cash out the door, 38,700. So let's look at H. Depreciation on plant and equipment was 2,500. So H. Here we have depreciation is an indirect expense, so that's going to go into manufacturing overhead, 2,500. There is no cash outlay for that. It's just depreciation, so we're going to call that accumulated depreciation of 2,500. Okay. All right, let's look at I. I'm sorry this problem is so long. It is a lot longer than it should be. Okay, so for I, manufacturing overhead allocated at the predetermined overhead rate allocation of 80% of direct labor costs. So what we're going to do is figure out what our direct labor costs are going to be and then take 80% of that. So we're going to do that by, in F, we had our total labor. And so we had the 17,000 and then we had the 3,600, which was the total of 20,600. So for our predetermined overhead rate, we're going to take that 20,600 and take 80% of that. 600 times 8. So 16,480 is what we're going to go ahead and allocate. Now, keep in mind, this is just our best guess. This is just what we think is going to be allocated for overhead. It's not actual overhead, it's just our estimate. And then what we have to do is go back at the end to see what our actual expenses were and compare it and adjust. So I'm going to take work in process inventory, and we said that was 16,480, and then manufacturing overhead 16,480. Okay, so let's take a look at the next one. Jobs completed during the month, and it gives us a cost. So that's going to lower our work in process and increase our finished goods because it's going from being partially done to being completely done. So let's go ahead and increase our finished goods. And we said that was 47,430. And then I'm going to decrease my work in process. Inventory. As it moves from being partially done to being completely done. And then the next step, of course, would be from completely done to being sold, where it becomes a cost of goods sold. All right. So then sales on account were $104,000. On account means it hasn't been paid for yet. So it's going to be accounts receivable, which that was 104,000, and that's revenue of 104,000. Now, there's one thing that we have to take into consideration, and that's what did it cost us? Well, we just calculated it up here. It's in our finished goods. I'm sorry, I spelled this wrong. This should be an N. There we go. So just like when we are accounting for revenue, we've got to account for what it cost us. So in financial, you did 2 entries for this. When you had inventory, the actual sale, and then your cost of goods sold, $47,430. And it's going out of our warehouse. It's now gone. So let's get rid of it. Finished goods. Okay, so that accounts for both the sale and what it cost. All right, so I think this hopefully is the last one. Adjust for over or under allocation of our overhead. So we now have all of our actual expenses. We also have what we allocated, and we need to find the difference. So let's go ahead and figure out what those different expenses are. So I'll add it up over here. So we had the 1,200 in here in overhead. We had the 18,400. We had the 2,500 for depreciation. I probably should be doing a T account for this. So that was our actual expenses. Now, we allocated 16,480. So let me actually just do a T account here. Manufacturing overhead. Merge these. Okay. So wherever I have manufacturing overhead, it's on the debit side here. So let's put it on the debit side over here. On the debit side here and here. And then we have it on the credit side here. So I'm going to do 16,480 here. So let's go ahead and add up the totals. Okay, so I am off by the difference. So I'm off by 56.20. So I underestimated. My actual expenses are $5,620 more than what I had estimated. So I'm going to have to increase my cost of goods sold, and then to zero this out, I'm going to have to credit it. I've got more over here on the debit side, so to zero out that account, I'm going to have to put it on the credit side to make it zero, okay? So let's go ahead and make that entry. And that is L. So I'm going to increase my cost of goods sold because it's more expense than I had originally thought, 56.20. And then I am going to credit my manufacturing overhead to make that zero. Okay, so those are your journal entries. And I think from here, the next portion was they wanted you to go ahead and do T accounts. I think you can probably do T accounts just copying them over from these journal entries. And then they also wanted you to do a raw materials subsidiary ledger. Again, you can do that directly from these journal entries. And then the trial balance, I will just put on here quickly so that you can see what it looks like. So cash is 49,300. And then we have accounts receivable, and that was here. Inventory was, first we have to split it here. So we have raw materials. What is wrong with my typing? So raw materials was 24,150. Work in process, 38,500. Finished goods was 2,400. And then we have all of the other trial balance. I'm running out of time on this one. So I think with the journal entries, you can probably go ahead and get this.